Welcome to the Exit Plan Show. Today's guest is Tim Scott. He's the founder of Wallace Scott Law Firm in Denver, Colorado. Stick around to the end of this interview and we're going to show you how you can subscribe to our newsletter, download some free guides, and maybe win a free book. Thanks for joining us. Thank you to Zarlingo Robb, CPAs and Business Advisors in Wheat Ridge, Colorado, for providing a location for us to film this episode. At Zarlingo Robb, they think like business owners. For more information about Zarlingo Robb, please click their link in our website show notes. Hi, I'm Norman A. Hood, financial advisor and host of the Exit Plan Show. I interview America's top advisors like today's guest, Tim Scott, to help business owners like you enjoy more personal freedom, grow your company faster, and retire someday on your own terms. Tim Scott is with the Wallace Scott Law Firm in Denver, Colorado. His practice areas are estate planning and administration, business and individual taxation planning, exit and succession planning, tax controversy representation, entity formation, and business growth and incentive planning. Hey, welcome back to the show, Tim.
Thank you.
Today we're going to talk about tax controversy representation, which I know is an area that you focus on at your firm. So let's just get started.
So what that really means is our firm represents taxpayers through the process of audit all the way up to the process of going to tax court if it has to be, or some other the federal district court. So, and everywhere in between. So it's not a pleasant time for taxpayers, but we take a good, hard, aggressive stance with the Internal Revenue Service to ensure that our clients are only paying the tax that they're supposed to pay.
Okay. And what are some common tax controversies that can actually impact an exit plan when an owner's getting ready to leave?
So one of the things that is a hot issue at the moment is if a client's entity, being specific here now, Norm, if a client's entity is an S corporation, and that client desires to exit, one of the things that has come up quite a bit in tax controversies and audits, for example, is the S corporation is not being run the right way. For example, the business owner is not taking a reasonable salary, the business owner is taking too much in distribution, or not distributing amounts pro rata to other shareholders. While I'm a big fan of the S corporation entity, it is a very technical entity that has to be run in the right way, and Internal Revenue Service has task forces every year with certain specific things that they look for, and the S corporation and the way it's been run has been on that task force list for a number of years now.
Okay. And when someone's in that situation, say the IRS has them in their sights and they've identified what they think's a problem, what are some of the common resolutions to that? If we have somebody in the audience that's going through that right now, maybe. Sure.
If the area is in audit right now as opposed to anywhere else up the stream, then it's our desire in representing our clients to settle this matter, hopefully no change at the audit level, but whatever happens, have some resolution the earliest we can.
Okay. And
unfortunately at times we see it go through audit, then to IRS appeals and not get the right answer that we want, and then we have to go up the food chain a bit to the IRS attorney's office. What's interesting there is we have a lot of success at that office because they're charged with actually litigating a case, so they have to understand the hazards of litigating that. So really we try to settle this and resolve it as soon as possible so the taxpayer doesn't have additional cost and worry. This is a big emotional, worrisome time for a taxpayer.
Okay. And then, we talked about the issues that can come up. We've talked about how you resolve the issues, but probably the most important thing, which is kind of back to planning ahead, is what preventative measures can a business owner take?
So it's interesting that with the benefit of what we do in the tax controversy world, back to the business and tax planning or even the estate planning, we're able to understand the whole process because we've seen it play out where we weren't involved at the front end in the planning ahead area, but we got brought in the oh whoops, now I have an audit problem. And so now we're dealing with that. So planning ahead, we have seen, because we know what the IRS or the any tax commission state, any state that you're in the United States, we know what those hot button issues are. So we try to steer our clients in the right planning ahead area to make sure that they're comfortable with their risk tolerance and how they undertake a plan.
And the cost of planning ahead is probably quite a bit less, isn't it?
Far less, yes.
Okay.
Far less.
Okay, so that wraps it up. For more information about Tim and Wallace Scott Law, please go to our website. And while you're there, you can subscribe to our newsletter. You can download some free guides, and you'll have opportunities to win lots of free books about exit planning. Thanks for joining us.